Think you're pre-approved for a home? You might only be pre-qualified, and the difference could cost you the home that you want. In this video, I'm gonna cover the difference between being pre-qualified and being pre-approved, and I'm gonna add one special little thing at the end that'll set the difference between you getting a home and maybe the home of your dreams. So here's what it is. We're gonna jump right in. Get pre-qualified. What does that mean? So I tell everyone in a lot of videos, if you're even thinking about buying a house, it may be 6 months from now, maybe 2 years from now, always get pre-qualified. Because getting pre-qualified is gonna iron out all the details, it's gonna set you down the right path, and it'll answer the questions that you have, like what does my credit score need to be? How much do I need saved? Do I make enough money? Okay, so getting pre-qualified is a lot like having a conversation. You're talking with a licensed loan officer. You might even be talking with a realtor, because a lot of realtors know this data too, but I always recommend talking to a loan officer when you're talking about your finances and getting a home loan. So getting pre-qualified could also mean you submit an application, but a thin application. Just I'll put in my income, I'll put in my debts, and I'll put in how much money I have saved. And based on that information, you could be qualified for a $500,000 house or a $300,000 house or whatever it is. And with that data, you now understand, and you have an idea and understand where you stand in the home buying process. Now, getting pre-qualified, like I said, is a conversation. Maybe you submitted a little bit of data. Now let's get into pre-approved. This is for the serious buyers. These are for the people that want to go shopping and they want to sink the deal. And when they put in an offer, they want to be taken seriously. Okay, so when you get pre-approved, you are actually having your credit pulled. We are verifying your income. We're verifying it with a couple different steps. One, you're going to submit paycheck stubs, and two, we're going to get a verification of employment, which means we're going to pull a record that shows that you've been employed, where you're at. It's going to show us how long you've been there, if you make an hourly rate, salary rate, if you work overtime, if you get bonuses, commission, all the different little breakdowns when it comes to your income. We're also going to verify your assets. So there's a couple different ways. A lot of banks nowadays are set up electronically, so we can actually order an electronic verification of deposits that shows that where your income gets deposited and where you have your money saved. Or you're going to submit bank statements, okay? Because your bank statements are going to show what you have saved, at least the ones that you want to provide that show the down payment and the closing costs that you're going to come in with, okay? And you're going to have 2 months of those. So when you do submit for a pre-approval, 2 months of bank statements and last two paycheck stubs. You may get paid once a week, just 2. You may get paid every other week, just 2. You may get paid once a month, 2, okay? Always 2. And then we're gonna pull your credit. We're going to pull your credit. So it's gonna pull in the bureaus that we need. We might start with a soft pull. We might do a tri-merge, which is a hard pull, which pulls in all of your bureaus and it gives us all 3 scores. Either way, we're still verifying your debts that you owe to a bank, and we're verifying your credit score to make sure that we meet the guideline. We also do an analyzation of your credit to see, have you been on time? Do you have any lates, 30, 60, 90-day lates? Do you have any foreclosures, bankruptcies? All the stuff that reports to a credit report. So it's a deeper dive into your file, okay? And then we do our due diligence. Of course, we make sure that it meets the guidelines based on the loan program that we're going with, okay? There's a number of loan programs. I don't want to get into that. We have other videos that cover that. But we want to make sure that when you do submit an offer using a type of program, you want to make sure that that is going to be able to get approved down the road when you do get in the contract, okay? So a pre-approval is a deeper dive, and we're verifying income, assets, and credit, verifying it. We're saying, okay, you meet all the criteria, and then we issue a pre-approval letter, okay? That pre-approval letter is what you give to the seller's agent when you're placing offers, or maybe the seller if you're dealing directly with the seller, that shows that a licensed loan officer from a licensed bank has verified the income, assets, and credit of this person, and you can buy this house based on this purchase price, okay? Now, a pre-qualification, once again, is more of just a conversation, kind of letting you know where you stand, if there's anything you need to work on, maybe you need to save a little bit more money, maybe you may need a co-signer, so it's more of a conversation, even if you do submit partial data. Pre-approval, all verified. You're good to go, solid as gold. Now I'm gonna add one more thing to this, just one more thing that makes it even more solid when you're placing offers out there. And this is where a lot of people have missed out on opportunities, because this one extra step could be the difference between you getting the home of your dreams and not. And that's getting pre-approved, underwritten. So when you get into contract on a house, you found the house, the home of your dreams, you put in an offer, you got it accepted, the file now goes to an underwriter. Now the underwriter may be looking at your income for the first time. Maybe looking at your credit and your assets for the first time. And maybe there's questions that this underwriter has that we should have answered a long time ago. So what I like to do with the clients is always start with the pre-qualification, then let's get you pre-approved, then let's get you underwritten pre-approved. Because if there are any challenges that aren't foreseen on the front end, they're gonna be found by the underwriter. The underwriter is gonna be able to identify, where did this deposit come from? Maybe the loan officer didn't find it. Hey, I don't know how this income came in, but I'm finding that they got a per diem. Have we been doing this for 2 years? So there's a lot of things that could pop up. I don't want to give you, all the things that can pop up, but getting underwritten approved is an extra step that you will go through, that we do for you, that will ensure that when you do get the home of your dreams, you're getting that home. It's not just going to be a fingers crossed, I hope this works out situation. Okay. Now, the best part about it is that when you're placing offers, you're going to tell the listing agent or the seller of the home, you've already been underwritten and approved. That's good as gold, same as cash. It's so solid, because you're not just basing it on the due diligence of a loan officer. You're basing it on the due diligence of a loan officer, knowing the guidelines, knowing the file, and then you went to an extra step to the underwriter, the decision maker of the home loan, and they say, yes, of course you can buy this house, because your loan officer, Chris and Lee, they put a perfect package together, and your income is solid, your assets are solid, your credit score, everything meets the guidelines. Of course, Mr. and Mrs. Smith, you can get this $500, $600 million house, because the package is put together perfectly for the program that you guys are going with, and you are approved. So now you get to place that offer with the sellers or the seller's agent and say, hey, we're already pre-approved, we're good as cash, and if we need to close faster, we can. Because typically an average contract is somewhere between 20 to 30 days, okay? And that's for someone that hasn't been underwritten yet. But in this case, we've already done our due diligence. We've done a lot of the work on the front end. All we really need is the appraisal, because we need to identify the property, make sure that the value's there, make sure that there aren't any necessary repairs done to the property before you can buy it. And that's basically it. So you might be able to wrap this thing up in 2 weeks. So if you have a seller that's eager to move, eager to get in contract, and eager to move on to their next place, and have you move into the home of your dreams, of course, this could be the difference between you getting a house and not. So once again, getting pre-qualified is basically having a conversation. Getting pre-approved is verifying everything and knowing you're approved. Getting underwritten pre-approved is verifying the loan officer's work, giving it the stamp of approval, so that when you're placing offers, you're good as gold. If you have any questions about this, you know how to reach us. Our phone number is in the description. It's in our homepage. So we're not secret agents. We're found all over the place. Give us a call. We want to help you. We hope that when you place an offer, it gets accepted and closed when it needs to close. Hope you guys enjoyed this video. Have a great day.